Welcome students. Today we are going to deal with the new topic, that is stock market indicators. So you all know that BSE and NSE are the most important stock market in India. And BSE represents Sensex and NSE represents Nifty. So always we see stock marketing going up and stock marketing going down. So what actually these stock market indicators are? If you look at this, it's a stock market index is a statistical measure which shows changes in taking place in the stock market. So to create an index, a few similar kind of stocks are chosen from amongst the securities already listed on the exchange and grouped together. So there is a calculation for example, the sector wise, or they can say performance wise, they choose the stocks for the calculation method. Now, what they go for? So the criteria for stock selection could be the type of industry. It might be automobile industry, pharmaceutical industry, banking industry, insurance industry, mining industry. It might be market capitalization. They check for how much or the size of the company, how big it is, and how it is performing. The value of the stock market index is computed using values of the underlying stocks. The stock value, they take base value and they take market value, and any change take place in the underlying stock prices impact the overall value of the index. So they take some, for example, BSE Sensex take 30 stocks for calculation. If any of the selected stocks prices vary, so that impact can be seen on the stock index or a stock exchange. If the prices of the most of the underlying security rises, then the index will rise and vice versa. So the whole picture of the indexes can be totally dependent on the securities which are taken for the calculation. If they increase, the market increases. If they decrease, the stock market fall down. So here we use the term called the bullish trend, and also we call it as a bearish trend. So bullish trends always represent the uh, going up of the stock market, and bearish trend we say the falling of the market. So in this way, the stock index reflects overall market sentiments and direction of price movements of products in the financial, commodities, or any other markets. Even we can see the gold price, rising of the gold price. Even we can deal commodities on the stock market. So that all comes under with the calculation. So coming back to the types of stock market indexes, the first is price weighted index. So in this type of stock index, each company included in the index makes up a fraction of total index proportional to the company's share stock price per share. So in this simple format, adding the price of each stock in the index and dividing by the total number of companies determines the index value. A stock with a higher price will be given more weightage than the stock with a lower price, and therefore will have a greater influence on index performance. So when the index is choosing the stock, they choose such stocks which are performing well in the market and which are representing very nicely in the market, the particular sector. Now, coming to the equal weighted index in the stock market, so it is comprised of group of publicly traded companies that invest an equal amount of money in the stock of each company that makes up in the index. So the performance of each company stock carries equal importance in determining the total value of the index, because the weighted is given equal to all the stocks. So any stocks performing, so equal proportionate will be taken for the calculation. Now coming to a value weighted index, and also called as capitalization weighted index. In this type of market index with individual components or securities weighted according to their total market capitalization. So in this market capitalization, they use the total market value of firms' outstanding shares. So uh, it might be holded by the institutional holding, it might be holded by shareholders, or it might be even company insider holdings also. So the calculation multiplies outstanding shares by the current price of a single shares. Now looking at the calculation part, if we look at this simple example, so we have three type of shares that we have given name A1, A2, A3. Outstanding shares for A1 is 5 lakh, for A2 8 lakh, for A3 6 lakh. The base price is 120, For A2 it is 150. For A3 it is 110. For A1 the current price is 200, and for A2 it is 900 and 150. If you look at the calculation of market value weighted index, so looking at the share price, then outstanding shares and base price, multiplying with the base value to the outstanding shares. So we will come with the value of 6 crore for A1, 12 crore for A2, and 6 crore 60 lakh for the A3. So altogether it will be 24 crore 60 lakhs. Now coming to the calculation with the current price. So if we will come to know current price with the 5 lakh outstanding shares. So here we are multiplying outstanding shares. So 200 with the outstanding share, we will get 10 crores. So for A2, we will get 72 crores. For A3, we will get 9 crores. So overall, it will be 91 crores. So when we take the market value weighted index, so total current value is divided with the base value and multiplied with the 100. So we will get the value of 370. So now coming to the price weighted method. So it's a simple way. So what we do, so base price of A1, A2, A3, total will be 380. And looking at the current prices of A1, A2, A3, that will be 1250. So simple method, current price will be divided with the base price and multiplied with the 100. So we will get 329. Now looking here, we will get 370 with this method. And with this method, we will get 329. Now coming to the equal weighted method, so the percentage change in shares have been taken 66.67, 536.6, and the weight is given one third, one third, one third because it is equal weighted method. So weighted average will be 22. For A2 it will be 166.67, and for A3 it will be 12.12. So if we take the total, it will be 201.01. So equal weighted index will say 100 plus 201. So the value we will get is 301.01. So if we look at equal method weighted method, the value will be 301, and the price weighted method 329, and the market value weighted method it is 370. So this we have discussed regarding market indicators and the types of market indexes.